If you're broke, most people will tell you that you need to, number one, go out and earn more money, and then number two, go out and get a 0% APR credit card and move all of your debt there. But this is the worst thing that you can do right now. I'll show you. Right now, the majority of Americans are broke. The majority of Americans have little to no savings, and the majority of Americans have little to no investments. This is where the first thing everybody says you should do is figure out how you can earn more money. Except that doesn't work. Statistically, when most people earn more money, they end up in a bigger financial hole. Why? Because when you earn more money, you have the ability to spend more money. When you earn more money, you have the ability to qualify for more credit cards. When you earn more money, you qualify for more debt, bigger lines of credit, which means now you can spend more money, buy more things with money you don't have, which digs you into a bigger financial hole, which is why we see so many six-figure earners in America broke, living paycheck to paycheck. It's not because of how much money you're making, it's because of what you're doing with the money. Earning more money is important, but you gotta know when to earn more money. And if you're one of the millions of Americans that has credit card debt, this is what everybody says, just move this credit card debt to a 0% APR credit card, that way you don't have to worry about the interest anymore. Except that doesn't work either. When most people hear 0% APR, they think zero cost. That's why industries selling you 0% APR are so profitable, because they are giving the illusion of free money so you can buy whatever you want and worry about the price later. And that's why I like to call buy now, pay later, broke now, broke later. Now again, this doesn't mean that you should avoid 0% APR altogether. This means you need to know when and how to use it the right way. That's why in this video, I want to go over the 5 things that you need to do in this order if you are broke, to fix being broke right now. And as a little disclaimer, I'm just a random guy on YouTube. I'm not a financial advisor, so always do your own due diligence and don't blindly trust a random guy on YouTube. And if you stick with me until the end of this video, I'm also going to show you how you can get a copy of this ebook, How to Build Wealth as an Investor, that my team at Briefs Media wrote for free. So if you stick with me to the end, I'll show you can get a copy of this for free. The 5 things you need to do are: number 1, you got to stop the financial bleeding. Number 2 is you got to figure out how to pay down your high interest debts if you have any. Number 3 is you got to figure out how to get more money. Number 4 is you got to make a lifestyle adjustment. And number 5 is you got to let your money make you more money. So let's start by talking about number 1, how do you stop the financial bleeding? The fastest way for you to have more money is by stopping your money from leaving your bank account. That means right now you got to, number 1, stop eating out of restaurants. Number 2, stop going out on vacations. Number 3, stop going to the Gucci store. Number 4, stop going to the mall in general. And number 5, you got to cancel that monthly massage membership. This one is painful, but you got to stop letting money leave your bank account. Once you stop spending your money on these things, the second thing I want you to do is I want you to renegotiate some of your bills lower. Call up your cable company, your internet company, your phone company, and see if they can lower your bill, because what ends up happening with these service and utility companies is every year they slowly keep raising your bill, and they hope you never notice it, and they hope you never call. But if you take 15 minutes, you can save 15% on your bill. I know, sounds like the Geico commercial, but this is where what I want you to do is take a look at what your competitors are charging for these utility and service companies, and then call up your company and see if they can bring your bill a little bit lower. It's an easy way for you to save some money without sacrificing anything. And then the third thing that I want you to do is I want you to make a spreadsheet. I don't care if it's on a piece of paper, Google Sheet, Excel. Take a piece of paper and you need to write down where your money is coming and where your money is going. This one is difficult, not just because it takes some time, but because it takes some real mental health, some real mental capacity to really look at what you've been doing with your money. So what I want you to do, take a piece of paper like this or a Google Sheet, and at the very top you need to write down where your income is coming from. Is it your job? Is it your business? Is it your investments? Write down all of your sources of your income for the last month at the top. Then I want you to write down all of your expenses. Now, this is going to be through your credit card statements, through your debit card statements, through your bank statements. I need you to write down every single place where you spent your money over the last month. Then, at the bottom of this, I want you to write where else you put your money. How much money did you save? How much money did you invest? How much money did you give to charity? You want to write this all down because you need to know where your money is going. In business, they say if you cannot track it, you can't optimize it. Well, it's the exact same thing here with your money. If you don't know where your money is going, how in the world are you going to be able to optimize your money? This is going to take you a little while the first time you do it. It might take you an hour the first time you do this, but you want to do this once a month. At the end of the month or the beginning of the next month, take a look at where all of your money went. And the reason why you want to do this is because as soon as you do this, you're going to see a whole bunch of expenses you forgot that you had. You're going to find subscriptions you forgot that you were paying for. You're going to see how much money you're spending on groceries and the organic food that you didn't need from Whole Foods. You're going to see other places where you can start renegotiating your bills a little bit lower. And then automatically, you're gonna look at them and say, wow, I gotta stop spending so much money at Benihana's. And when you do that, that's going to allow you to finally start living within your means, meaning you're no longer going out of your means. You're no longer going into the payday loans or your credit card to just make your monthly payments. Because if you keep relying on other people's money to make your bills, you will never, ever, ever have the opportunity to get ahead. So start with this. Once you finish this is where now you come to number 2, which is your high interest debt pay down. To really understand this, let me show you the power of compounding your money and investing your money. Let's assume now that you can invest $100 a month and you start this at the age of 25. And if you're not 25 years old, well, let's assume that you're 25 years old and you start investing $100 a month and you put this money into the stock market and you can get an average 20% return a year, and you do this until you retire when you're 65 years old for 40 years. Now when you retire, guess what? You're gonna have $10 million to your name in your investment account from the small little $100 a month investment. Now you're gonna hear this and say, but Jaspreet, I can't go back in time to 25 years old. Or Jaspreet, I don't know where I'm gonna get a 20% return on my money. How do you do that? Well, do you want to know a company that's getting a guaranteed 20% return on their investments being paid by you? Your Visa, your MasterCard, your American Express. Your credit card company is charging you 15, 20, 25, sometimes 27, 28% in interest on every dollar that you spend that you don't pay back in time, and you are the one that's making your credit card company rich. This is the interest that you're paying to your credit card company. Everybody talks about, oh, when do I put my money in the stock market? How do I grow my money in real estate? How do I put my money into this? But the first thing you gotta do is you gotta pay down this high interest debt first. And that means now you started with cutting up some of the expenses. Well, now you gotta really figure out how you can attack this high interest debt. This is where now it could be worthwhile for you to move some of this high interest debt to something like a 0% APR credit card. Notice before we do that, you got to figure out how to stop the financial bleeding. You got to figure out how to control your spending before you move your money to a 0% APR credit card, because what ends up happening to so many people is you take this debt that you have and you move it to a 0% APR credit card and you think of it like free money. You forget about the interest that you're supposed to be paying, and then you start swiping like you did before. Now your debt balance starts to increase instead of decrease, and then the 0% APR period expires, and now you get hit with even higher interest rates. Now you're stuck in a bigger financial hole that you were in before, which is why before you move your money into a 0% APR credit card, the first thing you gotta do is figure out how to control the spending. Then, this is where this can be worthwhile, because now if you don't have any interest for 12 or 6 or 18 months, now you can attack this debt as fast as possible, put more money towards this debt, that way you can pay this off quickly, because if you are the person that is making your credit card company millions of dollars over the course of your lifetime, you are the reason other people get to fly in private jets and you don't get to have the benefit because you're the one that's paying for all those expenses. And this is where I want you to understand this and work now to pay down the high interest debt. Once you do that, once you start attacking the high interest debt, once you pay down the high interest debt, this is where now we talk about number 3, which is how do you get more money? You can do this in conjunction with number 2, because what you're gonna realize is if you wanna pay down this high interest debt faster, well, if you have more money, you can pay down that debt even faster. Now, the reason why I talk about getting more money after controlling your spending is because, well, like I talked about in the beginning of this video, when most people earn more money, they end up in a bigger financial hole. When most people make more money, they say, oh, I can go out and drive a better car. I can go on a nicer vacation. I can go out and get a bigger home. When most people make more money, they spend more money. And that's the reason why most Americans are broke and will continue to stay broke. So if you don't want to continue being broke, you got to know when you got to get more money, and you got to know why you're getting more money. Now you're not getting more money to drive a faster car, to go on a better vacation, to have a bigger home. You're getting more money, that way you can pay down this high interest debt faster, and that way you can invest more money, save more money, and build more wealth. Now, how do you get more money? Again, you can do this from your job. You can do this by getting a career change. You can do this by getting a second job. You can do this by creating a side hustle. There are so many ways for you to create more money, especially not because of the internet. There's an infinite number of ways to earn more money if you're willing to put in the work, if you're willing to take on risk, if you're willing to invest in yourself, if you're willing to fail, and if you're willing to try things. If you can do that, you will be able to make some more money. Now again, when you make more money, you're going to be tempted to want to go to the Gucci store, to go to Louis Vuitton, to go to Apple, to go to Lululemon. But this is where now I want you to take that money and use it to make yourself richer. The first thing is got to pay down the high interest debt. Then when you get more money, you can put that money here, but we'll talk about that when it comes to number 5. But you get more money, that way you can build more wealth. If because this is what wealthy people are doing. They make more money to buy more assets that make them more money. Wealthy people make money to make more money. They don't make money to drive a faster car. They let the money that the money makes buy them that faster car, but they're making money. They're working hard to make money to make more money. They're working hard to make money so their money can make them more money, and the money makes is what's paying for their lifestyle. This brings us to number 4 now, which is a lifestyle adjustment. And this one is difficult. And if you don't like me now, you're definitely not going to like me after this. And the reason why this is so difficult is because this lifestyle adjustment often happens where you realize, maybe I shouldn't have bought such a big home. Maybe I shouldn't have bought such an expensive car. Maybe I shouldn't have financed this car. Maybe I should have bought my car with cash. Maybe I should still rent a place. And this is a very tough realization because everybody in the world is selling you this idea that you gotta own a big and expensive nice home because this home that you live in is the best investment that you'll ever make. And that you work so hard, you deserve a nice car. You should finance your car. Everybody's financing their car. Everybody's leasing a car. What's the big deal? You don't gotta worry about the maintenance as much when you lease the car. But if you're the person that's now paying $500, $600, $700, $800, $1,000 a month on their car. Now 20% of America has a car payment that's over $1,000 a month. When you're paying all this money for your car payment, and then the premium gas, and then the insurance, and then the maintenance, well, you're oftentimes sacrificing your ability to actually build any wealth because all of your money is going to BMW. All your money is going to Mercedes. All your money is going to Jaguar. And you have no money left over to take care of yourself. And so now when you realize this, that okay, I gotta pay down this high interest debt. I need to have some money for my savings. I need to have some money for my investments. But all my money is going to Gucci. All my money is going to Mercedes-Benz. All my money is going to BMW. All my money is going to my landlord. All my money is going to my banker for my mortgage. This is where you gotta make a lifestyle adjustment. And that means now you might need to downsize your car. Get rid of that expensive car and go to a used Toyota Corolla or a Toyota Camry or a Honda Accord. Maybe that means you gotta downsize your house. Maybe that means you sell your house, pocket some cash, hopefully, and go into a smaller apartment, go into a smaller home. That way you have less payments. And this is so difficult, not only financially, because now you gotta sacrifice some of the nice things, but then everybody's gonna look at you like you lost your mind. Because when you downsize on some of these things, everyone's gonna think you're running into financial issues. Everyone's gonna think you're having family issues. Everyone's gonna be thinking that something went wrong in your head. When in actuality, you're actually building more wealth now than you were before, but the average person doesn't understand it and they can't see that. So now on the financial aspect, you have to understand, I wanna do this. And you gotta break the chains of that, what everybody else does, and make the tough financial decision. And then after you do that, you gotta deal with all the mindset stuff. You gotta deal with all the criticism. You gotta deal with all the hate. But this is where you gotta make the decision. What's more important to you? Would you rather be a millionaire? Would you rather be wealthy? Would you rather have that financial freedom? Or do you want to look rich so everybody else thinks that you're just part of the club? And I'm going to let you decide what's better for you. Once you do that, this is where now you want to let your money make you more money. This is where the real wealth is built. Because what most people do is they make money to spend money. You make $1,000, you go to the mall and you spend $1,000. You make more money, you get a bigger apartment. You make more money, you go on a nicer vacation. This is how the average American is taught to think, and this is how the average American is taught to spend. And this is the reason why most Americans will never be rich, and this is the reason why some Americans will continue to get wealthier and wealthier and wealthier because they understand the system. And until you understand this, you're going to be the person that's making everybody else rich at your expense. Now, what does this mean? This means taking your money, some of the money that you make, and instead of spending it, you can use it to buy assets, things like stocks, things like real estate, things like businesses. These are the 3 most time-tested and proven assets that have built more wealth than anything else over the last century. So now, what do? Well, instead of going out and shopping at Louis Vuitton, at Gucci, at Chipotle, at Apple, you can buy a piece of these companies. How do you do that? Well, the stock market makes them more accessible. Instead of just going out and paying money to your banker or your mortgage or your landlord, you go out and buy a rental property. And this is where now you got to change your mindset. Instead of just being a consumer, you want to be the producer. And there are ways to do this that don't require a ton of time and a ton of effort, but you got to start putting some of your money there. Now, the nice thing is you don't need millions of dollars to start or hundreds of thousands or even thousands of dollars to start. But you have to start shifting your mindset because now when people go and shop at Lululemon, you're the one that's getting paid because you own a piece of the company. When you own some real estate or you own shares of real estate, because there are companies on the internet that allow you to own shares of real estate. You can check out some of my affiliate partners down in the description. But when you own shares of real estate, well, now you benefit when people pay rent. You benefit when real estate prices go up. Of course, there's risk if the economy goes down, if you see a market crash, if you see a real estate crash, if you see a stock market crash, the value of your asset goes down. However, what we've seen over the last century is that despite the market crashes, despite the recessions, we've seen asset values rise. Now, this requires some financial education to know how do you identify a good investment, how do you know when to hold on to an investment, how do you know when to buy more of an investment when things are down. But it starts with a shift of mindset of understanding I need to go out and be an investor instead of just spending my money and making everybody else rich. Because when you're an investor, you're spending your money to make you more money. When you're a consumer, you're spending your money to make somebody else more money. It's that shift in mindset, and this is exactly what we cover in this ebook by Briefs Media. I told you in the beginning of this video that if you watch this video until the end, I'm going to show you how you can get a copy of How to Build Wealth as an Investor for free. If you want to get a copy of this ebook by Briefs Media, all you got to do is click the link down in the description below or go to briefs.co/ebook, and in this ebook, we start with the basics of how do you build the mindset of an investor, to how do you save your first couple $1,000s, to how do you pay down your high interest debts, to then going a little bit more advanced, to how do you invest your money? What are the different ways that you can invest your money? How do you generate cash flow from investments? To how do you spend your money smartly? To how do you earn more money smartly? To how do you protect your assets? There is a ton of value in this ebook. And if you want to read this ebook, it's completely free. I got the link for you down in the description. There are 5 big money lies that are keeping so many people poor. And I can virtually guarantee that every single one of you watching this video have heard some variation of these money lies before. So what I want to do is I want to start by going over what these money lies are so you understand them. And then number 2, I want to go over what you can actually start doing with your money today with actionable step-by-step